Titan posted its Q3 FY21 numbers and they are in line with the ET now expectations. Revenues and margins both came in line while the profits of the company were slightly below the expectations. So now let's look at the nitty-gritty of the numbers. The revenues grew by around 17.56% and that was came in at 7,296 crores. While in terms of the profits of the company, yes, the profits saw a decline this time around of 10.9% and came in at 419 crores. So what is impacting the profits also is that we saw an exceptional item this time coming in of around 137 crores, and this is a provision that the company made for an impairment of their investments in the Flags business, the Flag subsidiary of theirs, where the wholly owned subsidiary of theirs. So this is the investment they made, provision that they're making on this investment because they're not seeing much of a business coming in over there, and that is why they feel that there is a requirement from this provision. And what I can read from the notes as well is about the provision is that it is because of the business and the COVID impact they decided to make this provision, an impairment provision of around 137 crores due to the ongoing current pandemic. So that is what has impacted the profits of the company. Now talking about the margins of the company, we saw a 10 basis point contraction. And not much of a contraction. It is, we were expecting it to be at 11.5%. The margins, the operating margins, they came in at 11.7%. So surely, in line terms in terms of the operating performance of the company, and a 10 basis point contraction on a year-on-year basis. Now, what is interesting in terms of margins is obviously there was an inferior mix which could impact the margins, but that was set off by the operating leverages as well as the benefits from the war waste program which the company has been carrying out. So those cost savings surely started supporting the margins of the company, and we did not see a sharper contraction coming in terms of the margins of the company, only a 10 basis point contraction. So let's talk about the revenues and obviously the segments. When you talk about the revenue, 17.56%, what is leading to this growth? Obviously, jewelry segment saw a fabulous growth coming in, which was pushed further by the festive season as well as the wedding season sales. Both of this was very impressive. Good growth was seen in wedding jewelry. Studded jewelry also saw a good recovery coming in there. So very good recovery overall for the jewelry segment, and jewelry segment overall accounts to 80% of the sales of Titan. So obviously that is something that's going to boost the top line. And other than that, we do have the bullion sales this time of around 340 crores as well, which further boosted the sales, the top line growth of the company as well. In terms of the watches and the eyewear segment also, we are seeing a good recovery coming in. Watches is also recovering on a sequential basis, though on a year-on-year basis right now, as of now, we're seeing a decline of 12% in terms of revenues, and eyewear is 6.8%, so almost 7%. That is something that is seen recovery, so we should wait for that. And as of now, it's not a bad recovery coming in for the eyewear and watches segment as well. Both these segments are showing good signs of recovery as well. Jewelry EBIT is also seen a growth of 7.3%, while watches EBIT is at 9.6%. So good EBIT margins in line with what we're expecting as well. So all in all, an in-line set of numbers coming in from Titan, mainly boosted by the jewelry sales. In terms of revenue, bullion sales is another thing boosting the revenues, while profits impacted due to the exceptional item of 137 crores of a provision for impairment of their Flag subsidiary. So that is something that is the overall earnings just coming in from Titan.